Good morning, everyone. David Ghai here with Kingdomminded Trading and Sin No More Ministries. Just wanted to record a quick video here, taking a look at the last 20 years on the market. When I talk about the stock market, I'm talking about the S&P 500. Those are the 500 largest companies traded on the New York Stock Exchange. A lot of the media outlets, they talk about the Dow and what the Dow did. The Dow's only 30 stocks. It doesn't represent the overall market. And so we always look at the S&P 500. So back in 2012, I did a study on the S&P 500. I traded it forward day by day, starting in 1929 all the way up until at the time 2012. So I studied the market day by day using technical analysis, and unfortunately, I lost all the data associated with that after going through the what happened in Mexico in 2022. But in any event, I just wanted to give you guys a big picture overview of the market as a whole, where we're at right now, where we've been in the past, and how you might consider, protecting yourself before the next major market crash. We don't know when that's going to be. No one does. We can't time the market, but we can definitely look at, history and, technical analysis is based on three tenets. Number one, price action discounts everything. So that means I don't listen to the news. I don't listen to what people say. I look at what the charts are doing. That gives me everything I need to know about how smart money is, um, you know, uh, handling their money. If I see what smart money is doing, that means institutional investors, mutual funds, pension funds, and so on. That gives me an idea of what's happening in the market, and then I can respond accordingly. The one thing as an individual investor, we have advantages over the institutions in that our positions are much smaller, so we can move out more quickly, or we can hedge ourselves using different strategies. So, in any event, we're just going back on the last 20 years. If we go back here to October 2007, a lot of us remember that. We had the mortgage, the subprime crisis, and we hit a high on the S&P 500 in October 2007 of 1576.09. A year and a half later, the market bottomed out at 666.79. There was a 57.69% decline in the market. So that was a bear market we went into. Anytime we see a move more than 20%, from the high to the pullback, then that's considered a bear market. Sometimes it does go back 22% or 21%, and that's still considered a correction. But technically speaking, a bear market is 20% or more. So this obviously was a bear market because we dropped 57, almost 58% in the market. And that was over a period of a year and a half. And then we go to February of 2020 to March of 2020. Just a month and a half, less than 2 months time frame, we pulled back 35.41% in the market. Moving fast forward to December of 2021 until October of 2022, the decline was more extended, 10 months, but the percentage-wise, it was a lot lower. So than the previous pullback. So it was 24.14% pullback. Then going forward to February of this year until April of this year, we pulled back from 61.47.43 down to 48.35. It was a 21.34% correction. Again, a correction is over 20%. I'm saying this is a correction because it bounced after that, and we made new highs in October 2025. And so the question is, what's going to happen from here? Last month we hit a high in the S&P 500 of 69.20.34. Where we're going to end up, what the low is going to be, that's a question mark, and what the percentage decline is going to be a question mark. We know that the low so far was 65.21.92. That's a 5.75% pullback, so that's a very small pullback. What I would say is that looking at technical analysis, this looks like a very bearish candle to me based on the monthly candle here. that we're seeing for this month. And so we'll have to see how it plays out. But, the question is, how are you positioned? Are you prepared for a 57% decline? Or are you prepared for a 35% decline, a 24%, a 21%? Are you prepared with your long-term assets? If the market was to pull back 50%, and if you have $1 million in your portfolio, how are you going to feel if it does go back to or drop to 500,000? And if that happens, is there a better way of managing your money? I would submit to you that there's definitely a better way. Smart money doesn't just sit there and watch their money disappear. They do everything they can to protect it. And as disciples of Christ Jesus, we're called to be good stewards of what God's given us. And so, I don't think it's good stewardship when we let $1 million. If we look at this back in October of 2007, brother one didn't hedge himself at all, so he ended up at 430,000. A year and a half after he was at $1 million. That's a 57% decline. That's not smart money. That's not the way to manage your money. He got back to break even, assuming he stayed in, but it took 4 years to do that. So that's lost opportunity. Brother two, he hedged himself. At some point below that $1 million, he had some type of position in place that earned money while his portfolio went down. He made money in a different bucket. Let's say he had an IRA, 401k, or something tied up in a tax deferred account where he could not access it without paying taxes and penalties. It might not be wise to sell out, right? It might be wise to keep that asset, but then to hedge ourselves and have a different bucket of money where we make money when the market goes down, and that offsets the retirement account. So, brother one got back to break even 4 years later. Brother two, had he hedged himself, might have been a $1.6 million instead of $1 million where he started. So, question is, which would you rather be? And then brother three, he sold out at some point, either at the low or close to the low, and he never got back in. He just gave up on the market. So, I would just encourage you, if you have an interest in learning more about kingdom-minded trading and what we're doing to help long-term investors and traders better manage their money and position themselves to steward that money properly, reach out to me. Our website's under development, and we're going to put strategies in place to teach people how they can hedge themselves and protect themselves from major market corrections. If you see a 20% pullback in the market, that's okay. I mean, if it stops there, you're going to get back to break even. And if you look at the drawdown effect, if you lose, that relates to the percentage of loss in your portfolio and what it takes to get back to break even. So, on a 20% decline in your portfolio, if you start with $1 million and you end up, it drops to 800,000 and then bounces, turns back up and makes a higher high. All you have to do to get back to break even is make 25% on the 800,000 to get back to the break even, and that's 20,000 gets you back to 200,000, or a 20% return on 800,000, or 25% return, I should say, gets you back to $1 million. But on the other hand, if you lose 50% or 57%, like the people in October of 2007 to March of 2009, if you have $1 million and you lose 500,000, you now have to make 100% on the 500,000 to get back to break even. It's just not it's not a smart way to manage your assets. It's what Wall Street teaches. I was a financial consultant. I had all the licenses. We were just taught to tell people, listen, look at the time frame you have, and as long as you're in there for that much time, it's all good. If you lose half your money, it'll come back eventually, and you'll get back to break even. Well, that's not incorrect information. You will, in terms of getting back to break even eventually, but is that the best way of managing your money? I'd say no. I'd say it's absolutely not the best way. There's a much better way. It's called hedging yourself. And that's what we're going to do. We're going to help long-term investors hedge their portfolios and we're going to help people who want to learn how to trade the markets using technical analysis. We're going to teach them how to do that. You can use technical analysis on any time frame. So if you're a day trader, you can use it on that. I'm not a day trader. I'm more of a swing trader, meaning I trade 2 days up to 20 days. I use derivatives. That means options on various securities. And because they give me a lot more leverage, and it's a much more efficient way to use capital than it is buying stock, as an example. So, in any event, if you have any interest at all, you can reach out to me at 725-305-1622. And I'd be happy to answer any questions. You can visit Kingdommindedtrading.com, and you can see some membership options for you. And if you're like I said, a short-term trader, a day trader, swing trader, 2 days up to 20 days, or an intermediate term trader, which is 1 month up to 1 year, we can help you on that way. And then if you're a long-term investor, obviously we can help you with that. It's just about analyzing the market overall using a top-down approach. That's what we do each week. We look at all the major indexes. We look at the 11 S&P 500 sectors. We look at interest rates. We look at what the dollar is doing. And then volatility, that's measured by, the VIX, Chicago Board of Options Exchange. They have a volatility indicator called the VIX, and that's basically shows us the volatility on the S&P 500 market. So in any event, I always tell people success leaves clues. So I don't try to reinvent the wheel. I just try to learn from people who've been there and done that so I can do better and help other people do better. And so, looking forward to answering any questions. Again, you can reach out to me at 725-305-1622. We started offering our service a couple weeks back with a charter membership option. And then we raised prices on November 21st. That's yesterday, but technically we haven't changed them yet. So you can get in. As long as they're posted the way that they are when you go to the site, you'll get those prices. But very quickly they are going to go up because I'm offering a PhD investor education for less than 20% of what I paid for my investor education. I paid over $26,000, and you can get that same education for 20% of what I paid. That's a no-brainer. And pretty quickly it's going to be going up. We're not going to be offering it at that steep of a discount. With that said, we're going to make it affordable. We want to help as many people as possible protect their assets and use their money to make money. And for my purposes, to fund my ministry, which is focused on the Great Commission, making disciples of all nations, planting as many seeds as possible, using all means possible, and then helping other ministries fund their ministries that advocate for the trafficked, advocate for the orphans, advocate for the widows, and support the unborn. And so that's what it's about for me. We are planning our 50-state Sin No More tour. Plans are underway on that. We intend to launch our 50-state tour on America's 250th birthday. I've been telling people Allegiant Stadium, if God gives us that, that's great. If he gives us something smaller, we'll take that. And who knows, if he might give us something bigger. We don't know. It's according to what God's will is, not my will. And so in any event, we're looking forward to, new relationships, new partnerships, new alliances, to further the kingdom of God. God bless everyone.